Welcome to Dinar and Dong Updates, tracking the rise of global currency powerhouses. At Dinar and Dong Insights, we serve as your trusted source for the latest updates on the Iraqi Dinar, IQD, the Vietnamese Dong, VND, and the monumental shifts unfolding across the global financial stage. Whether you're a long-time investor or a newcomer eager to explore emerging market opportunities, this is the space where knowledge meets strategy. Our mission goes beyond reporting numbers. We interpret what those numbers mean for your wealth, your portfolio, and your place in a transforming financial world. A landmark currency realignment. In an unprecedented move, the Central Bank of Iraq, CBI, has stunned the global financial community by adjusting the official exchange rate of the Iraqi dinar to 4.94 USD. Meanwhile, Vietnam's Dong has surged to 2.87, marking a historic high that reflects years of steady economic reform. These adjustments are not based on speculation or market volatility. They have been formally confirmed by the respective central banks and signal a fundamental realignment of these two nations in the international financial system. This isn't just a fluctuation in foreign exchange. It's the outcome of long-term reform, disciplined governance, and national aspirations for monetary sovereignty. For investors, these aren't just numbers. They are life-changing signals. The dinar's transformation. Iraq's revaluation is more than a monetary shift. It marks the end of an era dominated by the controversial dollar auction system. For years, this system artificially suppressed the dinar's true value, encouraged corruption, and eroded confidence in Iraq's economic institutions. With its dismantling, Iraq has reclaimed monetary control and made a decisive step toward transparency and global credibility. The CBI's bold move to peg the dinar at 4.94 reflects a deeply strategic policy trajectory. The country is signaling that it's ready to stand shoulder to shoulder with more developed economies. As a further sign of normalization, Iraq is introducing lower denomination banknotes, promoting everyday use of the dinar and reinforcing trust in its value. A rising star in Southeast Asia. At the same time, Vietnam has steadily worked its way to global recognition. The Dong's rise to $2.87 is the culmination of years of sound fiscal management, infrastructure investment, and robust export growth. Vietnam has become a global manufacturing hub, producing electronics, textiles, and agricultural goods for the world market. Key trade deals with the United States and the European Union have expanded Vietnam's influence and improved investor confidence. With GDP growth forecasted between 6.5% and 8% heading into 2025, Vietnam's trajectory points toward continued economic strength. Investors who have maintained positions in the Dong are finally seeing the payoff of long-term confidence in a resilient economy. Strategic moves that built toward revaluation. What makes these developments especially powerful is that they weren't accidental. Iraq's revaluation is the result of deliberate reforms. The removal of the dollar auction was a key step, but the broader vision includes strengthening the banking sector, attracting foreign institutions like Citibank and JP Morgan, and enhancing transparency in financial transactions. Vietnam's rise, similarly, has been built on strong fundamentals. A focus on industrial growth, digital transformation, and trade partnerships has set the stage for a sustainable appreciation of the Dong. Vietnam has diversified beyond traditional sectors and is now tapping into high-tech manufacturing and service industries. Implications for everyday citizens and global investors. These currency revaluations carry broad significance, not just for governments and financial institutions, but for regular people and investors around the world. For Iraq, a stronger dinar could lead to a better standard of living, increased purchasing power, and a reduced dependence on foreign currencies like the US dollar. The country is positioned to attract a surge of foreign direct investment, FDI, particularly in energy, agriculture, and infrastructure. Vietnam, on the other hand, stands to benefit from increased domestic confidence, reduced inflationary pressure, and a stronger competitive edge in global markets. Exporters may initially face challenges from a stronger currency, but smart economic management can mitigate these effects through policy tools and diversification. Not just a local story, a global trend. What's happening in Iraq and Vietnam may well be part of a broader pattern. Economists and currency analysts have begun to speculate that we are witnessing the start of a global wave of revaluations. Countries with undervalued currencies and untapped economic potential could be next. Financial experts such as Marxi and Frank 26 argue that Iraq's path mirrors guidelines set by the International Monetary Fund, IMF, and signals Iraq's final step toward global reintegration. Economic reform advocate Malakana sees Iraq's move as a catalyst for change among other developing nations. These bold shifts could inspire other undervalued economies to rethink their monetary strategies and pursue similar transformations. The importance of strategic patience. Despite the enormous potential, it's essential for investors to remain grounded. Iraq and Vietnam still face hurdles that could affect the durability of these changes. Iraq's economy remains heavily tied to oil exports, making it vulnerable to fluctuations in global oil prices. Continued political instability and bureaucratic inefficiencies could also slow progress. In Vietnam's case, a rapidly rising dong could harm exporters if not properly managed. The risk of speculative bubbles and capital flow volatility requires constant vigilance by regulators. Both countries must maintain tight control of fiscal and monetary policies to avoid overheating or destabilization. Smart investing in a time of transformation. If you hold IQD or VND, you may be standing at a financial crossroads with tremendous potential ahead. However, now is not the time for rash or emotionally driven decisions. Instead, arm yourself with verified information and expert insights. Follow official updates from central banks and beware of misinformation or social media-driven hype that can lead to panic or poor choices. Consulting a licensed financial advisor with experience in foreign currencies and global markets is strongly recommended. They can help evaluate the best time and method for converting or holding your currency, taking into account tax implications and long-term goals. Diversification remains key. While currency revaluations can offer dramatic gains, they are inherently volatile. That's why a well-diversified portfolio remains your best defense. Consider balancing your holdings with other asset classes like real estate, commodities, equities, and bonds. Diversification helps spread risk and increases your chance of achieving stable, long-term returns. The bigger picture, a shift in global power. The movements in Iraq and Vietnam reflect a deeper transformation in the world's financial architecture. These developments represent a shift away from Western-dominated systems and a rise in decentralized, sovereign-driven monetary policies. Emerging economies are stepping into the spotlight, defining their own paths to prosperity and asserting their independence. Iraq's revaluation and Vietnam's ascent are not just national victories, they're part of a larger, global narrative. As these countries strengthen their currencies, implement reform, and open their markets to the world, they also redefine the future of global finance. Final thoughts. Stay informed. Stay strategic. We are witnessing a moment of immense financial change. For some, it may prove to be a once-in-a-generation opportunity. But success will depend on more than just luck. It requires preparation, knowledge, and a flexible, well-informed strategy. Monitor policy changes closely. Watch for further announcements from the CBI and Vietnamese authorities. Understand how new capital regulations, interest rate adjustments, or foreign investment rules might affect your holdings. Ultimately, those who navigate this evolving landscape with patience, discipline, and foresight will be best positioned to benefit from this economic revolution. The future of finance is being rewritten, and it may well be authored from places like Baghdad and Hanoi.